Okay, so you can say what we need to say, right? Okay, so good evening. So today I want to quickly give you a very short summary, firstly of IS 20, then also I'll give you a very short summary of IS 2, and also I'll also do a summary of blockchain technology. So those are the three things I want to discuss today. When I'm done with that, then maybe on Friday, which will be our last revision, we will solve that question unpublished on Friday, God's willing. Then we'll put an end to our revision class with that particular question. So now, this is a past question, and what I'm going to discuss with you today, at least for government grants, just focus on that for your revision for government grant. For the inventory, focus on that for your revision. And for the blockchain, focus on whatever it is I'm discussing with you today for your revision. Looking at this question, right, it says that the federal government of Nigeria is committed to improving medium, small, and micro enterprises program. He now said that in view of this, the government issued directives to the Central Bank of Nigeria to give grant to MSMEs that has at least 25% local equity participation. Now said required. He said explain the two types of grant or government assistance that are recognized by IAS 20 on accounting for government grants and disclosure of government assistance. He now also said outline the two methods of presenting grants or government assistance that are recognized by IAS 20, accounting for government grant and disclosure of government assistance. So when we talk about government grant, the standard is IAS 20, and the full name of this standard is Accounting for Government Grants and Disclosure of Government Assistance. Why I chose this question to use to summarize government grant to you is that you see, these are requirement of 8 marks. This one and two, they said it's 8 marks. It teaches you the theoretical background of government grants. Then this B part now exposes us to how you account for it. So it's a very good question. And it was for 20 marks that diet. Okay, now nobody is going to ask you the definition of government grant or definition of government assistance, even though that is what we want to look at. So our focus here is how do you account for government grants and how do you disclose the government assistance. So that means that firstly, government grants and government assistance, there is a difference there. And what's that difference? For government grants, that one has, you can attach monetary value to it. Government grant, you can attach monetary value to it. But government assistance, that one is, it includes, it includes the government grants and any other benefit from government that is not monetary. Like the government might say, okay, we want to train your staff. They are not giving you money. We just say, we want to train your staff. Like what the I think the ministry one a ministry is doing now, trying to train people on technology. That's an assistance by the government. So assistance is huge. Government grant is even inside assistance. So when the standard wanted to define government grant, it said that government grant is an assistance. Okay, that's where the government gives monetary value to an entity in return for meeting a condition. But the focus here today is that you will see that um, this administration, for example, now, They are giving a lot of individuals now. Their target is individuals. They are giving a lot of individuals certain benefits. These are government grants. And there was a time this administration said that they will give 1 billion naira to 70 entities. You see, to those entities, that's a government grant to them. And they also said that they will give 750,000 naira to, I think, almost over 100 medium scale entities. And they will give petty traders, they will give them, they said, I think around 50,000 naira, like that. So these are government grants. These are government grants. So now, if you work in a company that gives grants, sorry, if you work with a company and the government now gives that company a grant, they give them money, then that's grants. But if government give them something that is not monetary, then that one is not grant. That one is like, we will call it generally as government assistance. But believe me, in the exam, if they want you to account for government grants, they will give you something that is monetary. So now, that's the difference between government grants and government assistance. This one has monetary value. Any assistance by the government that has monetary value, anything that the government gives to an entity that has monetary value is government grant. If it doesn't have monetary value, is assistance. Now, this question says that we should state or explain two types of government grants or government assistance. If you look at the solution here, the two types of government grants, there is a grant related to assets and grants related to income. That's the two types of government grant or government assistance recognized by IS 20. And grants related to assets, these are grants in which the condition attached is that the entity must acquire an asset. So the government will say, buy this asset, then I would return your money to you. So maybe the asset is 500 million. The government will say, buy it, I'll give you 400 million. So you will fund the remaining 100. But that 400 million is a grant related to assets. So any grant in which the condition is that you must acquire an asset, or the government might say, okay, take this money, but you must use it to buy an asset. That's a grant related to assets. And any other grant where you don't have to buy an asset, but government gave you something, that is definitely grant related to income. And that is it. So government grant, there are two types. Is either a grant related to assets or a grant related to income. Furthermore, that's for 4 marks. Explain the two types. The second one says that outline the two methods of presenting grants or government assistance that are recognized by IS 20. Okay, so this one covers the accounting itself. So you see, these two types of government grants, grants related to assets, grants related to income. There are two methods of presenting them in the books. There are two methods. The first one, which is grant related to assets. When government gives you money that go and use it to buy an asset, or government refunds the money you have used to buy an asset, government gave you a refund that take your money back or take a portion of that money back. Then the way you present that, there are two ways. Is either you deduct the grant in determining the carrying amount of the assets, you deduct the grant in determining the carrying amount of the assets, or you set up the grant as a deferred income. I will show you very soon. So it's either you deduct the grant in determining the carrying amount of the assets. So majorly this is saying that if you have bought the asset for 100,000 and government says I will give you back 30,000, That 30,000 is a grant related to assets, and you are going to deduct it from the cost of that asset. So that means in your books, the cost of the asset, you are not going to put it as 100,000, but rather you are going to put it at 70,000, meaning you deduct the grant in determining the carrying value of that asset. That's the method one. Method two is that you set up the grant as a deferred income. This is saying that if government gives you a grant of 30,000 naira, right? And let's assume that that grant would be beneficial to you for like 3 years. So ordinarily, you are going to recognize that 30,000 as income over 3 years. So in year one, for example, now, let's say you are supposed to recognize 10,000 naira as income. That is over 3 years. I'm just dividing that 30,000 by 3. So 10,000 each year. So if you recognize 10,000 as grant income in year one, the remaining 20,000, that one you go and put it as liability and put it as a deferred income. And why is that? You see, generally, before government can give anybody any grant, the entity must meet certain conditions. So, and if you have not met the condition, or if you have met part of the condition, there's likelihood that you might not meet it, and you might have to return back the money. So, the ones that you have not met, or the ones that you are still in the process of meeting, you don't recognize those ones as income yet until you have passed those periods. Therefore, for grants related to assets, there are two ways of presenting them. Is either you deduct the grant in determining the cost or carrying amount of the asset, or you set it up as deferred income. It will be clearer when we look at that question. Now, the second type of grant, which is grant related to income. So this one, you don't have to buy any asset. Government can just give you money that go and use it for this thing. Just like when governments were giving companies money to offset their wages, right? So that is a type of grant, but it's a grant related to income because it doesn't require that you buy any asset. So the way we put it in our books is either you just present that grant as a separate line item of income. So you just present it in your books as grant income, separate line item. Very straightforward. Grant income. That's the method one. Another way of presenting it is you net it off against related costs. Okay, so if the grant is helping you reduce your wages, for example, now, so you will not present it as a separate line item, but rather you just use it to say, okay, our salaries is 100 million, but government, out of this 100 million, government has given us, the, let's say 30 million or 40 million. So you just net it off against that 100 million. So these are the methods of presenting government grant. And this is everything relating to government grant. This is the theoretical background. It's not more than this. Others are just trying to be more detailed and all of that. But this is what you need at your level. Okay, before I go to the B part, is this one clear? Or let me ask us, do you have any question? Okay, okay. Though you will get it clearer when I solve a question. But what that one is saying is this, that if government is saying that I'm giving you money to buy an asset, so they give you 30,000, right? So there are two ways. Is either you deduct that 30,000 from the cost of the asset or recognize that 30,000 as an income. But Akura concept will not allow you recognize 30,000 as income in year one because that 30,000 is meant for funding an asset. So Akura concept will say that we recognize the income over the useful life of the asset. Over the useful life of the asset. So in year one now, at the end of year one, let's say the useful life is 3 years. So that means you're supposed to recognize 10,000 every year. So at the end of year one, you recognize 10,000 as income. You see, the remaining 20,000, you defy it as liability, meaning that, okay, this one you have not earned it. So you just defy it and put it as a non-current liability since it's in the next 2 years, right? So that's what setting up as deferred income means, meaning that, okay, since you are going to recognize the grant as income, right? And you cannot recognize the entire income this year, a portion of it will be deferred, right? I'm sure you get it better when we look at the B part. Okay, let's look at the B part there if there are no further questions. Okay, so this is the theoretical background. Is you see that it's very short. Just restrict your learnings to this at this point in time. Now, the B part, which is the calculation. This one says that during the year ended June 30th, 2019, June 30th, that's the year end. When you're solving any question and you're required to prepare any statement, always put in focus the year end, right? And again, the requirement of the question is where you should start. This one is saying that you should prepare a statement of financial position and a statement of profit or loss of Gbogbo Nise for the year ended June 30th using the two methods of presenting grants in financial statement for 12 marks. So with the way this question is, so that means you prepare statement of financial position, method one, method two. You prepare statement of profit or loss using method one, method two. That's what this question is saying. Because they say using the two methods. Okay. Having understood the question, now they said during the year ended June 30th, 2019, Gbogbo Nise Enterprises having qualified for the 25% local equity participation received the following grant from CBN. He said that on September 1st, 2018, that should be during the year because the year would begin 1st of July 2018 since it's ending June 30th. So that means it will start 1st of July. So this is during the year. So they said a grant of 1 million was received from CBN. The grant was in respect of training casual workers. The training cost incurred by Gbogbo Nise Enterprises in this respect was 1,750,000. Now, so this is the first scenario. May I ask you, this 1 million grant received now from CBN, is this one a grant related to assets or a grant related to income? Because that's the first thing you need to figure out. Is this a grant related to assets or a grant related to income? I need somebody to answer this. Okay, fantastic. That's correct. That's correct. So, and there are two methods of presenting grant related to income. Without dubbing, can you tell me? No, 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 no. I need somebody, one person to talk. Okay, fantastic, fantastic. Okay, but with the way this question is, you are supposed to do the two because they say using the two methods. So that means you are supposed to do the two. But that's correct. So that's the first thing you need to figure out, and which you are correct. Grant related to income. So it's either you present this 1 million as a separate line item, meaning you present it separately, and you present this expense too. You present that one to separately. I will show you. or you use this 1 million, you use it to net off against the related costs, right? Okay, let's go to the second one. This one says that on November 1st, 2018, this is also during the year, Gbogbo Enterprises acquired plant and equipment costing 8.75 million and received grant of 2.5 million from CBN. Okay, he acquired a plant and he received a grant in respect of the purchase. The plant and equipment has a residual value of 1.25 million and is depreciated on a straight line basis over a useful life of 5 years. So is this a grant related to asset or a grant related to income? Grant related to asset. And how much is the grant? 2.5 million. Abi? Yeah. So let's go to the third one. This one says that on June 1st, 2019, when is June 1st now? Wow, this is close to the year end. June 1st, 2019, a grant of 2.5 million was made by CBN. Okay. The grant was in respect of relocation costs that Gbogbo Nishi Enterprises had incurred for movement of its business to a free trade zone allocated to MSMEs, medium, small, and micro enterprises. The grant is repayable in full unless Gbogbo Nishi Enterprises recruits at least 100 employees. Okay, this is the condition attached to the grant. They said the grant is repayable in full, meaning that he will repay back this 2.5 million unless he recruits at least 100 employees. Okay, interesting. From the free trade zone local area by the end of June. And this they are giving him at the beginning of June. They now say that Gbogbo Nishe is finding it difficult to recruit this number of employees in the local area. Hmm. So in this case now, let me ask you, is this a grant related to income or a grant related to asset? Yeah, it's a grant related to income. So I mean the distinction is quite straightforward. For you to be a grant related to assets, they must tell you that he has bought an asset. That's it. Any other one is grant related to income. So this is a grant related to income. But again, this condition here now, they are telling us that you cannot meet it. For that reason, you will not be able to present this amount as whether as a separate line item or netting off against related expense. That cannot happen here. The only thing that can happen here is that he's going to present this money he has received as a liability. We just go and put it as a liability, as a grant repayable because of this last paragraph. They said he's finding it difficult to recruit the number of employees because the condition is that he must recruit 100, but now he's finding it difficult. So just don't recognize that. Now, you see, from this one that we have read now, what I've spoken about, you already know that there are two types of grants. There are two methods of presenting each of them. And one thing we are knowing about grants now is that they always have a condition attached. And if you cannot meet the condition, just put it as a liability because you will pay it back to the government. Government don't just dash money, they give a condition for it. Except in Nigeria, no condition. Okay, so now let's look at how we deal with this. So in the exam, you deal with this systematically. So let me show you this one, the way I presented this first one in my workings. So in my workings, I just wrote here that first one, the grant of 1 million for training of casual workers is a grant related to income. I just put that one there. And I know that when I'm preparing my statement of profit or loss, it's not really difficult to present. It doesn't require any working. So I left that one there. This second one that we identified that is a grant related to assets. You see, a lot of students were able to identify that because it's quite straightforward. They said that he has to acquire an asset, then they gave him a grant because of that. It's quite straightforward. But when the students got it wrong, let me show you. Let me show you. Now, this second one, we said that the grant of 2.5 million for acquisition of PPE is a grant related to assets. So I have to show my workings for that now because there are two methods for grants related to asset, and that will affect the value of my asset. So the first method is that I will deduct the grant in determining the carrying amount of the asset. That's the first method. Deduct the grant in determining carrying amount. So, and how does that work? They told me that the cost of the plant that I bought is 8,750,000. Let me show you this one. They said he acquired it costing 8,750,000. Okay. So since they gave me a grant of 2.5 million, I will just use it to reduce it. So deduct the grant in determining carrying amount. So that means to me, the cost of the asset is 6,250,000. So this is where a lot of students got it wrong when they wanted to now determine the depreciation on that asset. They told us in the question that the depreciation is they told us that there's a residual value of 1.25, there's a useful life of 5 years, and the asset was acquired on 1st of November 2018. So the key thing here is that the asset was acquired during the year because the year end is June 30th. So that means when you are calculating your depreciation, you have to prorate that depreciation to 8 months. Let me count it. November, December, then 8 months. Yeah, 8 months. So how does that work? So in determining my depreciation, these costs I've computed here 6.25. I get my 6.25, which is the cost of the asset, minus residual value, which is 1.25, divided by useful life, which is 5 years. So when you punch your calculator with this, you will get 1,000. So a lot of students stopped here. They did not prorate it by 8 months. You're supposed to prorate it since the asset was acquired during the year. So that gave us depreciation per annum of 667. That means my carrying amount is going to be the cost minus the depreciation, and that will give me my carrying amount of 5583. And this is method one. Method two is that you're going to set up the grant as a deferred income. So how would that work? That means that the grant will recognize the grant of 2,500. We will recognize a portion this year and the remaining is going to be deferred. However, my depreciation per annum, my depreciation per annum is going to be 8,750 because I'm not deducting the grant from cost in this method too. So my cost of the asset will remain the cost of the asset really, right? Minus the residual value divided by 5 years. Then that gives me 1,500. I prorated the depreciation. So my depreciation is 1,000. That's my depreciation. But the grant itself of 2.5, we are also going to recognize that one also over 5 years. We will recognize it over 5 years also. I will show you that in the statement. Okay. So that's for the second one, the one that has to do with grant related to assets. So this one that requires work in determining the depreciation because each method will give you different depreciation. And this question is asking us for the two methods. That's why we are showing the two methods here. So the first one, we deducted the grant from the costs that affected depreciation because we were now working with a reduced cost. The second one will not impact on the cost of the asset at all. So the cost will remain the cost. So that gives us what the depreciation will be. The third one also is also a grant related to income, just that we didn't meet the condition. But I noted it in my workings that the grant of 2.5 million for relocation costs is also a grant related to income. Just that this one didn't meet the condition, so I can't recognize it in my books as income. So now let's present our statement. Yeah, please go ahead. Okay, maybe that's an omission. I can just put it. So the carrying amount will just be 8250 minus 1000, right? I will show it in the statement here. Here, the 8750 minus 1000. Okay? Okay. All right. So now let's prepare our statement. So I will do method one. And method one is first for the grant related to assets, I will say deduct from carrying amount. Then method two for grant related to, sorry, still method one, net off against related expense. So I will use this for grant related to assets, this for grant related to income. That's the method one. So in my statement for method one, my depreciation in this method one, my depreciation was 667 for method one here. I just put it in my P&L statement, my statement of profit or loss, depreciation 67, right? And that's all. Then another item that will affect P&L is the first grant here of 1 million, right? So I'm netting it off against related expense. So that means that training costs will now be 1.75 minus 1 million. So it will remain 750,000. And that's what I present in my POL. So now with this depreciation now, using this method one, I've already dealt with all the grants in note one, note two. The only one I'm not dealing with is this grant of note three, because I'm not going to recognize it in P&L because the company did not meet the condition. It's going as liability. So this one was used from note 2, this one from note 1. The note 3 is not coming to POL because we are going to recognize it as a liability. The company did not meet the condition. So that's method 1. Now, still method 1, let me prepare my statement of financial position as at the year ended. The assets, plant and equipment, we calculated the carrying amount. Where is it? Method one. Yeah, as 5583. 5583. So I have my 5583. Then my liabilities. Remember, that's note 3, that grant in which they did not meet the condition. I have to put it as grant repayable. And it's a current liability because they need to repay as soon as possible. And that's 2,500. And that is it. That is all for method one. Now, for method two, for grant related to assets, the second method is that set up as deferred income. For grant related to income, the second method is present as a separate line item. So let me present my statements. So for method two, I got my depreciation as 1 million. Let me show you. Method two, yeah. Method two, that's for the, yeah. This is for depreciation from in method two. I got it at 1 million. 1 million. Then for grant related to income, I'm presenting the grant as a separate line item. So that means the training cost will come in separately as 1,750,000 separately. I'm not netting off. So my grant income, I will recognize it separately. The training costs, the training costs, these training costs, the grants they gave us relating to training costs, the government gave us 1 million. So I recognize my 1 million as a separate line item. And the 2.5 million that they gave us as grants related to that asset. Since I'm recognizing it as a deferred income now, and what's the useful life of that asset? What's the useful life of the asset? Where is it? It's 5 years. So that means I will recognize this grant of 2.5 million. Where's method two? Yeah, but I recognize it over 4 years here. Why did I do that? Why did we do this? There's a typo here when typing this. This should not be 4 years. This should be 5 years. This should be 5 years. Okay. So this should have been 500 because we are going to recognize this grant over the useful life of the asset. So in year one, you recognize the one relating to year one of this should be 500. It should be 4 years, right? Okay. So now in my statement of financial position, my PPE, the cost will remain the cost, which is 8,750. I'll simply deduct my depreciation. That leaves me to 7,750. Then the deferred income. So that 2.5 million the government gave me, I can't recognize everything this year because they gave me for an asset that we use for over 5 years. So the portion that I'm not recognizing as income this year, I will recognize it as a deferred income. Deferred, meaning an income I will recognize next year. So I will remove what I've recognized this year. Remember, I told you that this should have been 5 years. I will remove what I should recognize this year, 500. Then 25 minus 500, that gives me 2,000. That gives me 2,000. Then don't forget the note 3, the grant that the government did not, that the company did not meet the condition. That will still come in here also as a liability. So grant repayable, 2,000, 2,500. Okay, to be sure that you understood what I've mentioned so far, let's assume they ask you to now prepare. Yeah, I'm with you. No, it can't be in P&L. It should just be a liability. It can't come in as an income because we did not meet the condition. So it's like we just received the grant. We debited bank. We now credited liability. Yeah. Please ask. Wow, interesting. That's a very intelligent question. Yeah. So, but the challenge is if you prorate it now, over the 5 years, it will not make up to five. It will make up to five. So if you prorate what you recognize in year one, in year two now you now recognize the full remaining ones. It won't. So that's why for grants you don't bother about saying that okay, no, recognize the same amount each year. Since we have since just the same way you are depreciating the asset over straight line method, depreciate this one too over straight line. So don't bother prorating. But that's a very intelligent question. That's a very intelligent question. So that's why I didn't prorate. Otherwise, the thing will not jive. Yeah, I know they prorated. I saw it, but it's wrong. Yeah. So maybe you would have, because if you prorated, if you prorate, go and check it later. It will not balance out really, and it has to. What the government gave you is 2.5. So you have to recognize each year as income each year. So at the end of all the years, you should have 2,500 that you have recognized as income in your books. Okay. So I was going to ask a question that now I'm talking in respect of this particular one now that we said you should set up as deferred income. That okay, the government gave us 2.5. Since the method two is that okay, don't deduct from cost, but set it up as deferred, meaning the portion that relates to this year, we recognize it. So we prorated over 5 years. This is a mistake, should be 5 years. So we recognize 500. The remaining we recognize as deferred. So if I may ask you, in year two, how much are we going to recognize as income and how much will come in as deferred? In year two now, I'm talking just in relation to this particular 2.5 that we are setting up as deferred income that we recognize just leave this 2.5, it should be 500. 500. Yes, please. Okay. Yeah, that's correct. Yeah, that's correct. Yeah. So we're recognizing, and so that means every year we recognize 500 over the 5 years. Then the difference will now be decreasing. So since this was 2,000 in year one, meaning okay, we have recognized 500, we did not recognize 2,000. So in year two now, you have recognized another 500 out of the 2,000 deferred. So that means the remaining will be 1.5. That's correct. Okay, so that is it for government grants.